Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital, and joining me today is Michael Becker.
Hey, Paul.
Michael is also with Old Capital. Thanks for being the podcast, Michael.
Thank you. It's been a few, so I'm glad I'm back.
Of course. In the podcast today, we have a friend of the podcast, Will Crozier. And Will was in episode number 13. If you've had a chance to listen to that, just a real fascinating interview with Will, talking a little bit about his background and his history of single family before he got into multifamily. And now since he got into multifamily, since 2011, he has just skyrocketed with owning multifamily and a business we're going to talk a little bit about too that supports the rehab of multifamily properties. So again, welcome to the podcast, Will Crozier.
Thanks, guys. Good to be back.
Great. So if somebody hasn't listened to the podcast in episode number 13 about Will, give me just a quick background of you and a little bit about what you did prior to, say, 2011.
Okay, sure. A lot of my real estate experience came from single family flips. I was a fix and flip guy down in Southern California when that was the thing to do down there, when the market was going crazy in the 2000s all the way up through about 2006. So I kind of got my start in real estate down there, understood some of the concepts, and got addicted to it, really. When the market turned, went south on everybody, I was fortunate enough to get out and get off the table, all my chips, cash in, looked around the country, tried to identify the next hot spot of anywhere I could go in the nation. I looked at Miami, Vegas, Phoenix, Houston, Austin, San Antonio, Dallas. Those were the areas that I really checked into. And finally, I settled in on Dallas as the place that all the indicators were saying is the place to be, the place to go to really advance my career and jump back into real estate. So moved here, tried to jump into single family houses in DFW, was kind of shocked at the profit margins. Here were much, much smaller than anything I was used to in Southern California, and that kind of was disappointing. To keep the cash flow going, I jumped into the stock markets, became a broker as well, worked in finance and options and these sorts of financial instruments. As I was looking around, trying to get going in real estate again, I was fortunate to stumble into different groups and network into multifamily. And that was important to me because, houses in Southern California were quite expensive. And here in Texas, they were very, very cheap. And so to keep the money going, to not jump back on a treadmill and place a lot of capital as quickly as I could, looked into multifamily. And that's kind of where I picked up from there.
You tell a story, I think it's pretty funny. What was the demarcation line in Southern California? What really shocked you that you said the fat lady has sung in single family?
Sure, yeah, that's it's a memory that I will never forget. It was one of my very last flip houses that I was working on. And we got it all dolled up, and it was basically a junky old home, 1950s, never had seen much renovation. I think I purchased it for around $500,000, probably dumped $100,000 into it. And in my memory, it's been a while now, but I want to say that it was around a $750 transaction price when we went to sell it. And our selection of people we could sell to, ultimately we chose a family. Signers on the loan, I believe, were 4 or 5 signers, several different cousins and uncle combination of folks. They went something very exotic. I want to say it was a 40-year, it was interest only for a long shot. When looking into their employment situation, basically the best way we could translate it was that they were essentially, some of them were selling oranges under the bridge. So to me, that was a moment that this can't continue. Time to jump out of this and get back to reality.
And they were able to qualify for a $750,000 transaction.
Yeah, they did. And I believe that they got foreclosed on about 10 or 11 months later.
That's a terrible story for them, a good story for you that you kind of saw the writing on the wall that the end of the world was coming in Southern California. You got the heck out of Dodge. You moved your family to Texas and then you got into the multifamily business, and you've done tremendous since that period of time. But you did it not by yourself, but you did it with a team. Is that right?
That's correct. I believe in teams. I believe in partners. I believe in shoring up your sore spots and your weak areas with folks that are really, really excellent. So I was able to partner up with some folks to really advance the career, to find complementary skill sets, and to really just move as quickly as we could to take advantage of what we saw as a massive opportunity here.
So you've done a tremendous job from 2011 to 2014. If people want to listen to podcast number 13, they can kind of listen to a little bit about what you did during those years and months. But I'd really like to focus on the last 18 months since last time we spoke. And you've bought one or two multifamily properties, or three or four, and you've sold one or two. Let's kind of talk just on a high level. You purchased a property called Sierra Park. Tell me a little bit about that transaction. How many units was that?
Sierra Park, 656 units over on the east side of Dallas. It's a nice asset, mid-80s, all the things you want, the pitch roof and individual HVACs and water heaters. And just it was a quality asset. The interiors were untouched. That's what we're always chasing after, is these units that can really use a lot of love and care, especially on the inside, to boost the rents and boost the value of the overall property.
Yeah, nice property, value-added property, large property, couple pools on the property, couple dog parks, a couple of everything on that property. 656 doors, big transaction. Will and his team went in there and have done a tremendous job of rehabbing the property. Tell me a little bit about another property called Wimberley.
Sure. Wimberley Park, we purchased that. It was 440 units. Again, mid-80s, just a lot of the elements that you're looking for in a property down in Duncanville. This one was a little bit rougher. The exterior was really rough as well as the interior. That's what we love, though. I'm able to go in and really deploy, shake things up, and kind of rebuild it from the ground up. Rebranded it recently to 800 Link. I think that's the trendy thing to do now is, grab the address and just call it the name of the property. But looks great now. The rents that we projected, we're getting them all day long, and just kind of seasoning it out now, and we'll figure out what to do from there.
All right. So you're good at buying stuff. How good are you at selling stuff? What have you sold in the last 18 months?
We do okay on the sales side as well. We sold Regal Commons, which is down in Arlington, 444 units, late 60s.
That's pretty close to the General Motors plant down there and the Cowboy Stadium in that general area.
Exactly. Directly across the street from the GM plant, and they gave us the gift for Christmas a couple years back, or 18 months ago or so, when they announced that they were dumping about $1 billion in upgrades on that plant. So that got the buzz going, and you win some and lose some, and that one we got a little bit extra lucky with that announcement.
Let's just talk a little bit about that one real quick, because that was a transaction that just sold back about 4 months ago or so.
Yeah,
something like
right.
that. You guys bought it at X, you sold it at Y, and that Y was a big number. Tell me some of the upgrades that you did on that property. Because that property almost looks like a city block. I mean, it has its own streets on it, street signs. It looks like a public park that's in the property. I mean, it's fenced on the exterior. It's a gated community. I mean, you guys have just did a great job on that property. So tell me some of the things that you guys did to improve that property.
Yeah, so like you're saying, Paul, when these properties get larger like this, eventually you start feeling like the mayor of a town. I mean, you're putting policies and laws, and you're charging fees for different things, and you're essentially, taking over a town. That was a little bit tricky. It was an older property, 60s built in Arlington. None of these things pointed to, let's really go after this, let's really upgrade this. And we were about halfway through, and we started seeing what Arlington was going to be throwing at this, and of course the General Motors announcement. So we came in trying to really restrict budget to make sure we could renovate the interiors, to make sure we could get those rent bumps, but we're cautious on everything else we were doing. Not really knowing what the future would hold. So that plan of execution really worked well. We were able to make the interiors gorgeous the way we do on every one of our properties, but kind of left a lot of the outside amenities and rehab alone. And that was interesting. In a way, it worked out well because the buying group that came in and bought us after us, obviously the news had come out at that point, and they were able to size the deal, look at it again, and say, hey, there's a lot more we can do to this thing. Let's keep on pushing it now that we have all this good news and buzz around it. So we made out fantastic on that deal, and I believe they will as well.
Do you remember when you purchased the property, what your NOI was when you bought it? I mean, this can be a little bit of a wag. And then what your NOI was when you sold the property.
I'm going to fail you on that one, Paul. I'm sorry. I got my computer here and it'd take 5 minutes, but honestly, not off the top of my head.
No worries. Tell us a little bit about your last acquisition. And that's been only a short time ago. It was only about a month and a half ago. Property out in Abilene, Texas. Now, that's not a main market area. That is, how far in a drive from, say, Dallas-Fort Worth out to Abilene, how far of a drive is it?
It takes about 2.5 hours.
So it's a secondary, tertiary market out there. Tell me a little bit first about Abilene. What do you know about Abilene? What did you know before you made a transition to put capital out in Abilene?
I knew nothing about Abilene. Just flat out nothing. Maybe I'd been through and didn't even remember it. That's how much I knew about it. Obviously, we're pursuing deals a little further out based on the pricing action. How hot the market is here in DFW. It's really difficult to get solid deals and prices that don't make you sweat. So I looked around out and I found this deal through the network. Part of that was thanks to you, Paul. But it took a while to get comfortable with that. It took a lot of due diligence, digging in to Abilene itself, touring the town several different times, looking around, seeing what's going on, who the employers are. Of course, oil and gas is like the red lights flashing in everyone's eyes when you mention it, and really got comfortable with that aspect of the town. And then, of course, later we digged into the asset itself and got comfortable with both pretty quickly.
Yeah, on the macro level, the property is really not out in West Texas. It's a 2.5 hours west of Fort Worth. That's not really West Texas. It has a little bit of oil and gas influence, but not very much at all. Because like Will was saying, oil and gas can sometimes be the devil in the details, where how much of the employment is based on the oil and gas, what are the prices going to be, what are the job opportunities, where with oil and gas. But this property in this area does not have a large oil and gas population. There's a school out there and a lot of government employment out in that neck of the woods, and it's a very thriving economy out there. So it's not really tied to the oil and gas business. But you were not the first person selected by the seller to buy the property, but you made an offer. And what happened? Tell us a little bit about what happened. How did you wind up with the property eventually?
So yeah, we had pursued it several months ago originally and put in the offer. So did several other groups put in these offers. We were not selected. I guess a group that had already underwritten the deal several times before it even went to market had chased it down, had their ducks in a row, ready to go on the thing. So they selected them. Time passed, forgot all about it, and suddenly I get a call from the broker who was selling it saying, "Will, do I have a deal for you?" Apparently, some conversations, looking back on their notes, also with you, Paul, checking out what had happened on that deal. And we were pretty much the second group up. Paul had dealt with us many times before, and the lender who had come in already and underwritten the deal with the buying group that had dropped was ready to go on the deal. We just closed Sierra Park with them. So, all of our ducks were in a row, and the broker's basically saying, "Hey, how quickly can you jump in here, shore everything up, and get the deal closed?" And when we were out there the next afternoon, touring with the broker, and on the way home back from Abilene, literally drafting my partner in the driver's or in the passenger seat next to me, drafting up the LOI, hard earnest money, everything just good to go. The seller said, "Okay, this guy is real. We're going to get this thing done." And they selected us to move forward.
Up until this point, you've been just doing deals in DFW, which is a major market, over 7 million people in the metro area. You're going out to Abilene. What were some of the differences in, when you're looking for your markets? You described how you left California and decided on Texas after looking at seven, 8 different major areas. Can you maybe talk about what you were looking for when you settled on Abilene, and what got you comfortable, and what are some of the things you took into account when you're selecting a secondary market? Because it's much smaller and you don't have all the major diverse drivers like you do in DFW or Austin.
Sure. Ultimately, you are looking at employment. That's the economic engine of everything. So dug down really deep on employers. Who's employing out there? Is it going to be stable? Is it going to, if there's a major Air Force base there, and if there's a conflict, what's that going to do to us? It's also just this general buzz around Texas. What's going on in Texas? And does Abilene participate in that as well? I asked a lot of the research from the broker, who was interested in this deal before you had selected us? Who was chasing this deal? Who was inquiring about it? And he just gave me spreadsheets basically of all the data of the inquiries, where it's coming from. And it was surprising to me, all the folks that were coming from the coast. So they are interested in Texas, it seems to me. Houston has kind of a rap at the moment, but outside of that, Texas in general has a buzz. The employment was straight. The oil and gas thing wasn't getting in my way. There's the schools throughout. Retailers is the major majority of all employers out there. Yeah. So across the board, I saw growth. I saw building going on, housing developments, new retail going up, and it's all generally the things I want to see when I'm putting my own money into a deal.
So what class of property is this? What age was it built and what class?
It's a mid-70s, so it's a C, maybe C+, somewhere in that range.
So talking about comparing, say, Abilene to DFW, where we've done everything before, and what you've been looking at, so mid-70s product in Abilene, what's kind of the cap rate disparity? How much higher of a cap rate do you get in a secondary market in your experience versus what you would have received for a similar type asset here in DFW?
It was significantly less of a delta than I was expecting to find. We got a great deal on this particular project just because of where we were at, the history of it. We were already lined up with Paul and lender in things, so it dumped in our lap, but it wasn't necessarily because it had such a higher cap rate that made us that much more interested in the deal. In DFW,
but in general, what are you? I mean, your opinion is about 100 basis points higher in Abilene than DFW.
Correct.
What were you thinking when you were starting this journey? You're thinking it's more like 150 to 200 basis points.
I would have thought a lot more. Yeah, probably in the 200 range.
Yeah. So it's just interesting to see these cap rates have compressed a lot here in DFW, and I guess it's all relative. So the cap rates in the secondary markets and what you've seen have been following kind of lockstep, just about 100 basis points behind.
That's what I've seen. As you know, well, both of you, Paul and Mike, I'm not really into inventing a new market. I'm not really into going out and trailblazing a brand new submarket for myself. I would rather just look and see what's been done and duplicate it. I'm less adventurous that way. And fortunately, on this Abilene deal, what gave me a lot of thumbs up and good to go were the deals that had just traded. Really good comps, nothing, not too old, not too new, close by. We had deals that were trading in the 60 and 70,000 per door range. And I'm like, well, I don't have to invent anything here. I just step up and follow the pattern and I can do it.
But that property was broken though, too. I mean, how many doors was it?
It is 498.
And out of that, how many actually were dark?
150 down units.
Wow.
So that was the competitive advantage, that you were going to come in and kind of fix Humpty Dumpty. And as soon as you were able to get 150 plus doors online, that's where it was going to start to sing for you.
Yeah, that gives everybody heartburn. I mean, 150 down units, it was, negative cash flow kind of range. The banks are looking at it, and they looked at our team, our group, what we'd assembled as a strong group that has done this before. It can go in and really do it. So we were able to actually get the deal done. 150 down units just freaks out a lot of investors. For me, it was exciting. Been there, done that. And it just means we can go. We can implement and just drop the bomb on the property, as we say, and just transform it immediately rather than waiting 3 years to get the thing done.
So maybe we kind of go back to what we kind of touched on previously, the renovations part of the business. You obviously have been, well, if you don't know Will's been pretty successful repeatedly doing large renovation projects. That's his MO. He goes in and finds the worst property on the block and then when fearless and goes out and renovates. I mean, we did a deal back in 2000, I'm trying to remember, what was that, 13 when you did Las Brisas? 12,
yeah.
12, and it was just the toughest property on the toughest block in town. They went in and did a phenomenal job. And
50% occupied.
Yeah, 50% occupied. Just
the hot water heater hadn't been working on the property for a month or two before. So a lot of tenants dropped out of the property. But I was kind of wondering, the 50% of the people who actually stayed, did they actually take a shower for a month and a half since they didn't have any hot water on the property?
I don't think so. The whole place smelled interesting when we walked in.
Yeah. So you've obviously fearless a little bit when it comes to big renovation projects. So in your experience, like maybe we start. What do you look for when you're looking for a value add property? What are the things that excite you that make you want to investigate further a potential property?
Interiors. That's number one. That's where the people live. That's what they're going to pay the money for. So just in general, if you can find interiors that are untouched, I'd jump after them as quickly as I can. It's also nice if exteriors don't need, literally millions dumped into them, but you can still make a significant mark on the personality of the property. That's ideal. This property is one of those where the previous owners had spent all their money on the outside and none on the inside. In fact, didn't spend enough to even bring units online. So they'd already put a couple $1 million of hardy and new boiler systems and new roofs. And so the major components were there, and we kind of get to walk in and do the quote unquote easy part of it, and the stuff that brings in revenue and then boosts the whole property up.
So you've been renovating apartment complexes since Spanish Chase back in 2011, and now we are walking in 150 down units in Abilene. What are some of the differences and what you guys are doing today versus what you did back in 2011? What's kind of like the trends in the marketplace right now?
Well, early on, the first deal you mentioned back in Spanish Chase, we were treading a lot more carefully. Didn't have a lot of experience, didn't know what was going on in the whole economic sense of Texas and that buzz and what is going on. So early on, we were renovating on a budget. We had an idea to sort of upgrade here and there, but it certainly was not a universal, let's make this thing look as good or better than A-class units. That's where we've come to think, and our strategy is just let's upgrade this thing. People want a nice place to live in, they'll pay for it. And we've never really run into any issues with that. Make a beautiful, safe, nice, clean, upgraded place, and people move in and want to pay for it.
And so you don't do a tiered strategy. You don't have classic, upgrade, premium. Everything's just premium.
I think I believe at Sierra, we've toyed with that and since erased it on this Abilene deal. Certainly, it's nice to just bring some units online and get some of that revenue trickling in. But in a situation or a project like that where you can kind of use a broadsword and just go. So we're currently not leasing any units out there. They're unleasable. And as soon as we have our first batch online here in a week or two, then we'll start leasing our premium brand new units.
Oh, okay. Well, that's good. Do you have a magic number in mind as far as like percentage? That's one of the things you've gone full cycle on a few deals, and that's always, as a owner operator, you trying to buy a property and renovate it. That's always kind of the magic number. Is there a percentage of the units that you try to do an upgrade and hold some back as a classic for a potential buyer for them to have some level of upside, or you just go through and execute your plan as you go and just let it fall where it may?
A lot of communication with brokers. Early on, we were pretty much fix and flip apartment people. That's all we wanted to do. And sort of that magic number, it's a balancing act always, but seemed to fall in around the 60% complete range, leave around 40%. It's been clearly proven up. The banks aren't hesitant on the financials. They can see that they can walk in and simply follow the same pattern and do it. So 60%. On the Abilene deal, we plan to hold it a long time. It's a great property, the location of it. So we'll refinance it when it's time. So we'll go the full board on that one and do 100%.
So what you mean is 60% you want of the entire property, you want to upgrade and update, and leave 40% or so on the bone for the next buyer to come in and update the property. Is that what you mean?
Exactly, correct.
So speaking of 2012, back in 2012, you guys started a materials business. So you're going in and doing these major renovations. And back in 2012, you started an Exponential Property Materials Group. Correct, yeah. And back then you started to import what you were doing from China to assist in your renovations. So maybe you can kind of tell everyone a little bit about that.
Well, first of all, how did you get into that business? Because I think that's an interesting piece too.
Yeah, it's a fun conversation, especially in this group. Well, Mike, you said we started a business. That is completely accidental. It was never the intention to have a retail, wholesale, a business-to-business type enterprise going on. We just needed to save some money on our rehabs. So the whole point was to use to our advantage. One of our investors in the group was a Chinese national who had done quite a bit of importing from China into the United States for her own needs before. That conversation was going on around the same time that I was talking to you, Mike Becker, and you're saying, hey, Will, some of the bigger players here in town, you were working at Wells Fargo as the bank and you're watching invoices, and I just kind of how all that was coming together. You said, these boys that are really playing, they're doing this very thing. They're jumping over there and they're getting straight to the source and cutting out all the middlemen and just getting the best product in for the cheapest that they can. So these basically hit me in around the same month. out to breakfast one morning with my partner and this investor, Chinese national, and said, as soon as we can, let's jump on a plane and I'll show you the ropes, show you how to do that, how to import. And shortly after, flew over to China and targeted our first product, which was flooring, vinyl plank flooring. And we targeted that because you need so much of it. It's just, flooring is never ending. You get a project and immediately you need 250, 500,000 square feet of flooring. And so if you can find any margin in that, it just makes sense all day long.
So you started that and you started eating your own cooking. So you just bought it to renovate your own project. And that's what it was. And so eventually, how did you kind of morph into wholesaling or B2B sales of materials?
Well, again, kind of an accident. After flooring, we started picking up some of the other basic components of an interior rehab that we needed in bulk. And we're very networked. All of us are very networked. If you're going to be successful in this business, that's what you have to do. And folks would all the time be coming over to our properties, investors, passive or lead, deal sponsors. They're in and out and they're saying, wow, this is a really cool product that you have here. What is it? What are you paying for that? And kind of jump into the story about how we're getting it. And they say, well, can you order a little extra for us next time? And then it got a little bit deeper, and then we needed our own warehouse. And then it just kind of naturally grassroots progressed into an actual business. So
today, I'm one of Will's larger clients on our properties that we buy. We buy a lot of materials from Will, but today, where have you morphed as far as like make-ready boxes and crew and staff? And how do you interact with clients that buy materials from your company?
Sure. Well, until about 6 months ago, this was just kind of operating as a mom and pop, for lack of a better term. Just if it's convenient, let's do business. If we know each other, let's do business. And in the past 6 months, we've really invested a lot into the actual infrastructure of the company, hiring talent, brought some folks in that are sales folks, manager types, new trucks coming in, doubled the size of the warehouse, actually doing some advertising. So investing in the business finally. And it's amazing the difference that makes. Customer service is there, outreach is there, folks that are trying to solve problems for our customers or their solutions, essentially. So now I'm a limited contact. I'm happy to always talk business with anybody, but usually I'll just refer it along to the sales team or one of our customer service guys. Catalog, we have some online ordering going on. We'll come out to any property at any time, tour around, walk each floor plan, and basically make our checklist of, on our own deals, this is what we would do. This is what we recommend to you. They sign off on it, take some things off the list, add some other things. And we'll kit it into a single box for Unit 101. We'll go back to the warehouse and put the exact number of doorknobs, the exact number of smoke detectors, the kitchen faucets, the cabinet hardware. It's all counted out to exact. We seal that box up and we can deliver it directly into that unit so that parts aren't running off, things aren't getting confused. The overall plan and projection for that property from the owner or the deal sponsor or the management stays intact. It's a massive logistic liability theft type of thing that we try to take off the plate of the management company and the deal owners and take that into ourselves and use our own systems to sort of make it better for everybody.
Yeah, that's been a real key for us, that you don't have to store stuff. You don't have to keep a unit offline to store it or try to get a shipping container. You just almost on demand order, 2 A1s and 3 B2s, and next day drop shipped on the property and you're ready to go make ready the unit. So it's been a real nice evolution to see you from where you started to kind of where you guys are today. So besides that one touch, what are some of the reasons why someone would use you versus say like HD Supply or Nationwide MRR or one of the other big supply houses? What is your differences between you and say an HD Supply?
Well, it's so connected to our own projects is basically the best way I can explain that. We are only ordering the exact product that we are using in our own projects. And I and my partners and my regional managers are the ones selecting those products for North Texas value add, sort of A- through C style products. We're picking it. We're picking the price point. We want to make sure we can make it as nice as possible, but still get it into a 1960s C+ property and have the people pull the trigger on things like glass tile mosaic backsplash. It's something that no other property in their submarket's going to have that. But because we dug in, got the right price point, got the right style, are delivering it as they want it in the kit boxes, walking. Essentially, we had to solve our own problem in our own company, and now we're just kind of wholesaling that same solution out to other owner groups and management companies.
But you're not going to give a buyer of your materials 50 different choices. You're going to give them 1 or 2 or 3 choices. And what I like about that, it's the same analogy as, say, like Henry Ford did when he was coming together with a Model A. You can have any color you want, just as long as it's black.
Yeah, that's right. We have about 50,000 different selections of vinyl plank flooring that you can choose as long as it's driftwood, because that's the only one we're importing, because that's the only one that makes sense right now.
I think if you give people less choices than more choices, especially when it comes to maintenance of the property and not having your property look like a patchwork quilt, that all of a sudden you have a new property manager that wants the property to look this way, that manager goes away, then the next person comes in and wants it to look that way. All of a sudden, 4 years from now, when the maintenance person is trying to repair something, it's very difficult to figure out what works and what's not working, what needs to be changed, because it is becoming a patchwork quilt of an apartment building. And so I think having a consistent interior absolutely helps with expenses over a period of time. Would you agree with that, Mike?
Oh, yeah. I think having a uniform approach makes it nice and easy for the next guy to come in and understand what he's walking into. And we have, 40% of the units done or whatever the number is, and they just know it costs X amount to take it from, classic to premium, and they just need to budget the next number of units, and they get this rent differential, another $100, $150, whatever it is, and it just makes the math nice and easy. And having the patchwork or the different tiered makes it a little bit more challenging for the next guy that comes in and try to analyze your deal.
I think the biggest difference between HD Supply and Exponential is that HD Supply are not property owners. Will Crozier is a property owner and knows exactly what that property needs. And so that's the competitive advantage I think that Will Crozier has with Exponential, is that they're, just like as Mike says, they're eating their own cooking. They know what works and what doesn't work and what can be imported successfully.
We guinea pig ourselves all the time. I mean, we'll come in, sample a product, we'll run it through our models, see what the response is, see are we getting that little extra rent bump for that new kitchen hardware, or are we not? So we don't roll it out to the general public, so to speak, until we've proven it up ourselves. And the very exact product selection that we have, I get a kick when I hand over a catalog to any potential customer and they leaf through it and it's, 10 pages long, and they're used to, the HD Supply that's 200 pages long. But ultimately, it's the little guys, the small operators that have 16 units. They're the ones that want every single unit exactly the way they want it. And if you get your catalog in front of the folks that churn through 1,000 units per year, they want to know it works. They want to know what's the price point, can you deliver on time, is the style good, and that's it. Now deploy, roll it out, let's get this done.
So speaking of that, what are the markets that you serve currently?
DFW, obviously, all the way about 200-mile radius west, north, and east, and all that we're doing Waco, Austin, San Antonio, and soon to be Houston as well.
Okay, so the major markets in Texas and 200-mile radius around DFW is basically it.
Correct.
So if someone wants to get a hold of you and learn more about Exponential Property Materials Group, what's the best way to reach out to you?
The best way for me, by far, is my email address, which is will@expppg.com. That's Will at Edward X-ray Paul George.com.
And then do you have a website if someone wants to just look at the online catalog?
Sure, you can download the PDF at exponentialpropertygroup.com or exppg.com.
Okay, cool. Paul?
Will Crozier, thanks for being on the podcast. We definitely appreciate it. Let's make sure it's not another 18 months to the next time we come into the podcast and visit with you. Mike, thanks for hanging out with us again. Remember, if anybody has any interest in receiving the Old Capital white paper, go on to oldcapitallending.com or just dial into info@oldcapitallending and request the 15-page white paper report on structuring financials and the financing of apartment buildings. I think you'll find that to be interesting. Second, boy, did we have a good time at the down in Austin at the Omni Hotel, sponsoring the Fight of the Century last Tuesday, and also we had a great time on Wednesday at the Fight of the Century up in Grapevine. We had over 125, 150 people that showed up for that. What a great event. I think next month we're going to have a webinar talking a little bit about financing, and you'll be able to participate. We'll push out some more information on that on our next podcast, and you'll learn where to tune in for a webinar on financing and trying to get some of your questions answered. Again, thanks for joining the podcast this week. Again, Will Crozier, Mike Becker, I'm Paul Peebles. Thanks.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.